Hey guys, what's up? It's me, Kadir from the Funded Brothers. Yesterday I took a perfect trade on gold. This is how I made 8K using price action, and this is the only price action video that you will ever need. There is no hindsight trading in here because I actually took this trade myself and called it also live. Now let's hop on the chart and I'll show you guys how I do it. Guys, I partnered up with Quantacle. I'm gonna be giving away one prop firm account. I will ask you certain questions, so watch until the end so you don't miss the question, and good luck. What I'm about to show you guys is for every time frame. So this works for every time frame because price action is the same, just the probability is higher for the higher time frame and lower for the lower time frame, of course. So let's go into it. Price had a bullish run in here and we tapped now this fair value gap in here. This is the time where I don't trade anyways. This is Asia session, and now we came back with pre-London. So price already made a high, so we already managed to close also above this swing high. So first of all, we have to understand market structure. That's the key component of price action. If you understand structure, you will understand the direction. So this is really important if you want to get your bias right. You can also take trades without having a bias, but with this you will be able to get your bias right most of the time, So we are trading gold, we are at all-time highs. Obviously I'm looking only for buys because the trend is your friend until the trend ends. So just don't try to fight it. 2024 gold was bullish the whole year, so that should be a lesson for you all. Anyways, so now we managed to close above here. So this is my current swing low. So I don't want this low to be taken if I want to be still looking for buys. So that's the whole idea in here. You can have a wick below, but not a closure below. That's the key component in here. So let's see what happens if price comes back. We do have multiple imbalances in here, like fair value gaps, it's pretty much the same. But I'm looking for this area to be tapped in here. Wait, let me make this go on, yeah, like that. I'm looking for this area to be tapped, but more importantly, also this fair value gap, I don't want it to be closed. So let's see what happens. Price goes up again. Okay, price did not tap it and we are having a push. So keep in mind, as long as we don't close above this high, because we can wick, but I want closures because the closures can't be manipulated by the brokers. So we want the closures because the closures always tell the story. So we have no closure yet. So this is not a swing low for me. This right here, guys, is not a swing low for me because we didn't have the closure. So let's see what happens. We come back. Okay, now look, this was liquidity. This was liquidity. We had sell side liquidity taken out and buy side liquidity taken out as well. So at this point, we can take out this area, but I don't want closures below that area. So let's see what happens, because this is now a pretty strong closure. So you can execute a buy right here as well, targeting the high, because this is a valid entry. Why? Because you have the liquidity taken out in here, you have the demand tap right here, also the fair value gap, we didn't close it. So, and now we have a manipulation candle closure in here. So this is a perfect trade right here. Let's see what happens. You're gonna be targeting the swing high there. Okay, it's a winning trade, but this is not the trade that I took myself, in total honesty. So in hindsight, everything is easy, but I don't like things like that. So I like to be transparent, and if I took that trade, I took that trade, and if I didn't take it, then I'll say it as well. So let's see what happens in here. So now we have a closure above here, guys. So now you don't want this low to be taken out, but we can wick but not close below. So that's the key thing in here. Let's see what happens, what market will do. We are almost at all-time highs, by the way, just this 10 pips shy of the all-time highs. Okay, pretty strong 5 minutes in here coming down. We swept the low. Okay, we swept the low, but we didn't close above yet. So let's see what happens from here. Boom. Right there, we have a momentum shift in the market right here. Why? Because you have this bearish imbalance here, and market closed that bearish imbalance. So now, since we closed above, that's a clear sign for me that market wants to push up higher, because we are in a bullish trend. We swept this low, but we didn't close below. So that's really, really important, because the closures always tell the story, like I said. So what did I do in here? I take a buy right here, stop loss below that low right there, because if we break this low again, then it's invalid for me. But I will only enter if we break the high. So then let's see what happens. And the target will be up here for a 1 to 2 and for more. This trade went for way more. I held runners as well, but just for the sake of the video, I'll leave it around here, you know. So we are in this trade right now. Tap that 5-minute bullish imbalance now, or inverse fair value gap, whatever you want to call it. It really doesn't matter, you know. All that matters is a structure right here. It's an inverse fair value gap as well, but I don't really look at that. I look at normal fair value gaps. And since we closed that, we created a bullish one, tapped the bullish one, and now we are in profits. We have a really strong manipulation candle closure here as well. So at this point, all I want to see in the market is just continuation move higher, because if we took out this low and took the liquidity up here, then now our target is going to be this right here. And this, the way I like to do it is, this is a magnet at this point, and it's really like that, because we are in a bullish scenario. And on purpose I made the video like this, because I could have done it on like movements like here, you know, where market is just moving really nicely. But I want to show you guys how to trade when the markets are not that easy to trade, you know. And here you are in the range. People got caught up in the range for sure, but we managed to come out on top. Let's see what happens. Price almost tapped the break even and reverse from there. So at this point, my trade is at break even, by the way, because you have the break above this high as well. So let's see what happens. And from there on, price taps TP, and we are out of that trade, you know. Really, really simple trade, really easy trade. And this is actually, I took this trade on my 200K funded on tackle account. I made over 8K on that day. And this is just an example that if you learn price action, if you learn market structure, you can make a really good living, and you don't need much from there, you know. That's all you need in the markets: liquidity, price action, and understand candles, you know. So right from there, I took another trade actually after we had the pullback right here. This was the entry. I'll show it on the screen as well, like the entries. But this was the trade that I took there. Also 1 to 2, really good trade. And yeah, made 8K on that day, guys. So it's time for the giveaway question. The question is, what is your key takeaway from this video? What have you learned? Type it in the comments, and good luck. So guys, there we go. That's it. It's really simple as that. I don't want to keep it too long and behave like it's like a rocket science or whatever. Not, no, you just have to focus on structure. You have to focus on candles, understand what the fair value gaps are telling you, and you will understand the direction of the market, you know. Many people were shorting maybe gold, but you don't have to counter trend to get a high risk to reward. Just go with the trend, let the trades run, let the winners run, and cut your losers short. And yeah, that's it, man. I hope you guys liked the video. And also, we call these trades live in the Discord every day. I'll see you guys in the next video. Take care.